We're very pleased to present iSTOX and Endowus together on this webinar, two fintechs who, as I said, are bringing institutional grade investments to individual investors. And we will first have Sam with us here talk about Endowus, introduce Endowus, how they bring customizable institutional grade stocks and bond portfolios based on your own personal goals and risk appetite. So I'll now turn over to Sam to introduce Endowus and what he's doing there.
Yeah, thank you, Oi Yee, for that great introduction and wonderful sharing. Obviously, I think as an investor who's been investing for 26 years, I've been in the industry for 26 years, 17 of which was with one company, Morgan Stanley, where Oi Yee used to work as well. But for the past 3 years, we've been building up Endowus, which is a digital wealth platform, and really focusing on the core wealth problems that we experience. So the mission of the company is to really help people invest better so they can live easier today and live better tomorrow and through retirement. When we began the business, next page, please. The pain point was that we struggled to find ways to manage our own money, investing through the traditional banks or private banks. Or other wealth platforms was very costly. And oftentimes we got pushed products that were not suitable for us. So the advice that was given was not very good. It was very misaligned with our best interest as a customer. And, as working as an institutional investor, I knew that there were much better products out there, but we didn't get access to it. And I think this is the real problem that we face as investors here today in Singapore. And fintech companies like Endowus and iSTOX are both trying to solve this pain point that we feel every day. And today, after a long period of building our technology stack and solving the pipe and the problems, CPF has approved us as the first and only digital advisor for CPF money. So if you want to invest your CPF money digitally, Endowus has solved that problem for you. In a holistic and very simple manner. So for us, it's really about long-term wealth. It's about building retirement adequacy, and really the core wealth, which is equities and fixed income, the basic components of the building blocks. And this is where iSTOX and Endowus complements each other very well, because we are the core kind of building blocks, the basic building blocks, and iSTOX has a lot of wonderful products on top that you can build up upon and really flesh out your investment solutions and options. And we've built up a team now of about 38 people who are executing at the highest level. Just like iSTOX, we have a lot of experience from the institutional background. Oi Yee and Darius and Danny and everybody in the team over there is fantastic. We have an equally good team on our side. Greg, who used to be the Grab Payments lead and at UBS, again, with Oi Yee. There's multiple connections here. And Yuning, who used to run a family office. And so the whole team is very experienced and continues to be a private banking in Morgan Stanley as well. Ju, our Chief Technology Officer, was at Goldman Sachs Asset Management and multiple financial institutions. And our Chief Product Officer, JX, was in the Valley, Silicon Valley, building products for some of the biggest Silicon Valley companies. So today we're really trying to solve the problems that exist in investing here in Singapore across all sorts of funds, which is CPF, SRS, and cash. Next page, please. And we can skip this one. The next one. Yeah, so we care about a few things and focus on doing them well. Wealth is really, when you boil it down to the core, is three things. It's advice, access, and cost. As I mentioned, those are the real pain points. So what Endowus has done is build a systematic, strategic, passive allocation, really personalizing that journey so that we have an evidence and scientific basis for providing you with a personal investment journey. And it's holistic, which is really important because you can invest in a Tesla and it could have doubled, but if you invested $1,000 out of your 100,000, then your return is 1%. It's not 100%. So really, it's about being holistic with your wealth. Really being systematic about your asset allocation, Access to institutional share class. Oi Yee mentioned this earlier, and this is a key problem. Retail investors are the ones that really get the raw end of the deal every time. The private banks and banks all provide them with solutions that are really high cost, and they're built with a lot of embedded cost and fees inside it. So being able to access institutional like funds, institutional products is a really differentiated solution to the problem of wealth. And iSTOX and Endowus is very aligned that we're achieving good outcomes for our clients by accessing really high quality, best in class and institutional solutions. And the key third component of this success is cost. Because cost is just the other side of the coin of returns, because if you can lower cost, returns improve that much. So really with working with the industry players, working with the best, biggest fund managers to achieve lower cost using technology and digital solutions to lower cost at every layer are all efforts that I think we can all make to improve outcomes. Next page, please. So Endowus is an independently owned and operated company, but what's independent about it is that it's a fee-only wealth advisor. So the bulk of the industry still gets paid commissions for selling product and pushing products. And this misalignment is the key problem that exists in the current industry. Next slide, please. Currently, the cost problem is very pertinent here in Singapore. If you look at the global scorecard of fund markets graded in terms of fees and experience, Singapore is below average, which is surprising for a developed market like Singapore, and we're below China even or India. So it really is quite shocking that this distribution problem exists. Next page, please. This is a funny cartoon showing, a doctor prescribing some medicine to a patient saying, hey, try this. I just bought 100 shares of the pharmaceutical company. It's something that you would never see. It's like going to Singtel and saying that I want to buy the latest iPhone 12. And they say, no, you don't have a choice. You have to buy the Huawei because I get paid $1,000 every time I sell this product. It's something that is ludicrous to most people, but it's something that is happening in the financial services space, especially in this wealth space. Where we are getting, commissions and people pushing the wrong products to the wrong patients, I was going to say, but wrong clients, because they're getting this commission. Next page, please. And it's a very, very convoluted, backward and really complicated structure. So there are people making money off of us and our future wealth. But it's not the fund management guys even, it's the distributors in the middle who are taking a huge cut, both from the individual investors and also from the fund management companies through this hidden kickback commissions. And the worst thing is that it's not transparent. So, a lot of these fees are hidden, clients don't even know about it. And they think that sometimes, on these like fund platforms, for example, they advertise that it's zero fees. But in fact, 70% of the revenues for iFast Fund Supermart, Aviva, Doladex and Poems and all these guys, 70% of the revenue comes from kickback commission. So, I think it's really important to understand the structure of the industry and how we can clean it up. And the next page shows Endowus in this picture. Next page, please. And how clean this looks. The fund managers do their job, which is managing money. Endowus does their job, which is advising clients. And really, it's a complete alignment of incentives. It's a complete alignment of structures. And in developed markets, this is the right way to do it. And it's the only way to do it because commissions for financial products is illegal in many developed markets. Next page, please. So Endowus is really trying to be the Amazon of wealth. So you have products. Wonderful products out there. We're just trying to help you find it better, curate it to the client's needs, give unique access sometimes to certain products that are exclusive, but largely we're about aligning the values, finding the best in class products, and then achieving the lowest cost and curating it to the client's best needs. Next page. So, the only free lunch in finance is diversification. institutional frameworks of investing is really important. So it's not about just accessing institutional products, but it's about accessing institutional advice and institutional frameworks of investing. So diversification is something that is really important for you to do. So yes, you have equities, which is a core growth asset class, but you need to diversify with safer and uncorrelated assets, such as fixed income. And iSTOX's multiple private products is another great source of alternative assets, which provide low correlation and provide diversification benefits. And it really is just, riding through the cycles with lower volatility and better risk-adjusted returns. Next page. And you can see what happened even, this year in March when equities really, collapsed. This is every single recession in the history of the United States. And what equity markets typically did was fall more than 20% during that period. But during that exact same period, just having some diversification in bonds allowed you to ride out that volatility. And the worst thing to do is sell your position at the bottom of that market. It's really important to stay invested in financial markets fully and adjust the risk so that you can ride out that volatility by having some diversification. And bonds is a fantastic, product, and people worry that, fixed income will not be able to play that role. But again, this year we saw very clearly from even low interest rate levels that they played a very good role in diversification. And a lot of the private and alternative products that iSTOX provides to its clients can also be great diversifiers and risk mitigators in your overall asset allocation portfolio. And this is something that I just put in because we've had recent elections and people say that, look, a Republican president is good for the markets, or a Democratic president may be bad. But really, it doesn't matter because long-term, every single president has had a fantastic record. None of them was below 100%. You can see the only three guys was Hoover during the Great Depression in the 1920s. Nixon, obviously, because in the 70s, there was a massive oil bust and he actually was in power for a very short period of time. And Bush was the only one, unfortunately, but he had the worst luck because he began in 1999, 2000, just as the dot-com bubble burst. He recovered, but then he ended his term just as the global financial crisis ended at the end of his second term. So he is the only one to have achieved two massive shocks to the system and ended up only down like slightly 10%. So you can see that long-term market performance is really something that you need to be exposed to, and the beta exposure of markets. And the next page shows this even clearly, because the markets tend to go up for longer and bull markets tend to be much more, longer and much bigger than you think. And the bear markets typically last much shorter and the falls are much less than you expect as well. So it really is important to be invested. Next page. These are some of the biggest, giants of the investing community, people that most people, if you're a fan of investing, you'll understand and know. Jack Bogle, obviously founder of Vanguard, Templeton, Warren Buffett, David Booth, the founder of Dimensional, the inventors of factor-based investing, and also famously, he donated money to Chicago University to name his name as the Booth School of Management and Business. David Swensen is one that many people don't know, but he was a CIO of Yale Endowment. He really, built the frameworks of institutional investing, and the name Endowus comes from, institutional endowment investing for all of us. So the next page shows that, Endowus is really partnering with and standing on the shoulders of these giants. Vanguard, Templeton is in there, and names that are very familiar. But there is no need to reinvent the wheel. Just like iSTOX and Endowus, we need to leverage off of the best products, offer it at the lowest cost through institutional access, and really improve the client experience, add advice, build portfolios that is suitable, and really, give joy to investors as they invest their money and secure their financial future. Next page, please. And so this is the Endowus 60/40 portfolio, model portfolio as an example. built with Pimco's great fixed income product, the largest fixed income manager with $2 trillion of assets. Vanguard, which is the pioneer and leader in passive investing in Dimensional, the pioneer and inventors of smart beta factor-based investing. That portfolio obviously does tremendously well. And we put that yellow line at the bottom because that's what you would have done if you had kept your CPF money in your OA at 2.5%. People say, oh, my 2.5% is great these days. Yes, if you compare to your fixed deposits, it's fantastic. But if you're trying to secure your future and your retirement, 2.5% is not going to do it. It's not going to cut it. You really need to be exposed to the market, and it's the perfect pool of money to do that because your CPF is stuck in there for 20, 30 plus years. You can't take it out. It's the right type of money. You're compounding, and regular savings of every month from your wages goes in every month. So it really is the perfect pool of money to be investing. And your SA portion getting 4 or 5% is great. That's your bond portion. But your OA getting 2.5 should be really invested in markets and generating much higher returns of 4, 5, 6, 7% if possible. Next page, please. And this is a typical example of what accessing institutional share classes really means. Pimco Income Fund is probably the most popular financial product sold in Singapore. It's sold by DBS Bank in the retail channel. It's sold on the fund platform. It's sold on Swiss private banks like UBS or other outfits. And all of them have different layers of fees, and all of it adds up. And this is a Swiss private bank account where you need like at least $10 million or above to access. And even on that platform, it's much more expensive than the Endowus platform. And so you can see that Endowus is achieving great outcomes by accessing products that is not previously available, group buying for the individual, and providing unachievable costs, exclusive access, and therefore higher returns and better outcomes for our investors. Next page. We have a similar chart for CPF, and CPF just enacted in October the final cuts in fees. Previous to that, the fees were as high as 3% plus. And we started last year when we got approved in October of 19 below 1%, and we have maintained a fee that is unachievable elsewhere. And so we are still, around half of the cost of a traditional financial advisor or a fund platform. And the final page, next page, is so we basically are the only digital wealth platform. Sorry, we can go to the next page. That can invest all of your source of funds here in Singapore efficiently. So a one-stop shop digital wealth service provider where you can invest your CPF, your cash savings, and your assets efficiently at low cost. Next page. And it's really important to bucket your money in different buckets. So short-term rainy day funds or short-term liquidity management can be done with our Cash Smart solution, which yields 1% or 2%. That range, which is much better than anything that's available at banks or deposits. Really efficient daily liquidity. There's no lockup like fixed deposits to achieve these higher yields. We build efficient portfolios using institutional cash deposits and money market funds, and a little bit of also short-term fixed products as well. Hold to maturity fixed income in order to generate higher yield for you. And then you have the different pockets where you can, assess your risk and assess your timeline. This is a liabilities-driven model of managing your wealth and your assets. And for the long-term investments, you can allocate more and more of the alternative, iSTOX solutions into your portfolios as satellite strategies. Next page. So Endowus is really about focusing on what you can control as an investor. You can control your career, you can build your human capital, you can increase your wages and salaries. When you're investing, you can asset allocate better, you can diversify, reduce the cost. But most important to all of that is, really having control over your behavior. Investing for the long term. Don't panic when markets go down. Don't chase markets when it's going up. Really have a systematic plan for your financial investments. And also forget about all the things that you cannot control. We cannot control the outcome of the US elections or COVID or the economy or the stock market returns long term. But what we can control is these things. And if you control these things well, it will lead to good outcomes. Next page. One more page, please. So we're providing a promotion. We're so used to QR codes these days, right? So, for iSTOX, we extended initially to iSTOX employees, but also iSTOX clients and, people who have joined us on the webinar today. It's an exclusive promotional discount rate. And basically, iSTOX and Endowus is inviting you to sign up to endowus.com, 50% off all fees without any limit, which could run into the thousands or tens of thousands if you have a lot of money until middle of next year. So please join us in this revolutionary move towards financial technology and better solutions for all of us. Next page. Thank you for that. I'll hand back to Oi Yee.
Thank you so much, Sam, and thank you for the joint promotion. We're loving it. As we think about our own individual portfolio and how we construct it, I always say we must start with Sam, right? Because frankly, the public markets are still the largest, most liquid, and it's where there's obviously a very, very deep investment opportunity space. And that is at the heart of it, where everybody's portfolio should be very well constructed. I think once that is sort of set in place, and Endowus obviously will relook at your let's say your age or your retirement age, your cash flow needs, and help you rebalance that portfolio. Once that is on a certain sort of stable track, then of course, when you look at alternatives like iSTOX, that's when you can look at very, very different ideas, look at higher return risk products, etc., etc. And we'll go into it in just sort of right now. So, and iSTOX, what do we want to do? Our vision here is to give equal access to the financial markets through a regulated, transparent, and community-driven platform. And we built a platform that is multi-asset class that allows investors to invest in private market investments like hedge fund, private equity, private credit, etc. And why are we focused on alternative assets? As I mentioned, well, once the public markets are very, very mature, it's a very deep market, working with through Endowus with credible, and Pimco, for example, is the largest bond fund manager in the world. They have insights to the markets that not many fund managers would have. But I think sort of around most of your portfolio being allocated to the public side, the part that is there will be at some point a need to consider the private assets. If you look at what some of the large fund managers like BlackRock and Pimco are already starting to sort of look at alternatives and advising clients. If you see BlackRock is advising clients to look at more than just a 60-40 allocation to stocks and bonds, as it may not be enough to meet long-term investment goals because bond yields are still very, very low. The returns on that are going to sort of stay quite low given the environment. And so is it enough for long-term investment goal needs? Alternatives can lower volatility through diversification. It can enhance returns, but there are obviously some issues we will address shortly. And Pimco as well, they are also looking at adding alternatives, obviously, to their broader portfolio and management. And what are some of the advantages of alternative assets? A diversified portfolio, it's got low correlation to traditional assets and public markets. If you see what are some of the alternative assets that we sort of highlight in the green box, they are not traditional public stocks and bonds. These are hedge funds, private equity funds, or private equity or private companies, growth capital, venture capital, investing in technology companies at a relatively young stage of their life. Alternative credit, so not your typical bonds. It could be higher yielding, but with different underlying assets. It could be real estate. It could even be wines and fine art. I'm sure one day we will have the opportunity to launch a whiskey fund, and then we can celebrate with some of the returns. So not only does it provide diversification, there is opportunity to make higher returns, and therefore potentially higher yields relative to some of the bonds in the public markets today. But some of the disadvantages, which is partly why we have not seen a broader accessibility to investors and individual investors. The first is obviously is lower liquidity. These tend to be, for example, funds that are locked up. You cannot trade them. There's no market to sell if you were to require the cash. So you might have to hold on to a 5-year fund. For example, and even if you wanted to sell it, I mean, you would have to find a buyer, and you would have to negotiate a price, and clearly that is not worth the effort, because you will get an illiquidity discount. There are quite a lot of complexities in this investment structures. Not just the management fee, it could be multiple capital calls, and therefore you cannot predict when you need to invest and when you will take back the money. It could be, for example, high minimum investment. Hedge funds, for example, are infamous for that. Very high risk, high return product. Most of them you cannot get access to unless you have a minimum investment size of 1 million. Now, that is out of reach to many, many, many investors out there, even though hedge funds do provide that diversification and lower correlation to the public markets. Next slide, please. And what's been happening in the last decade or so is there is an increasing wealth or capital allocation from the institutional capital. In 2019, the private market AUM reached about 6.5 trillion, which is about 2.7 times more than it was 9 years before that in 2010. A lot of that capital has come from sovereign wealth funds and insurance companies, partly because they have a longer term horizon. They're able to hold on to these investments for a longer period of time. So, talking about a 5-year fund or a 10-year fund doesn't frighten them. They need to have actually 5-year or 10-year investment products to match their asset and liability for insurance companies. And we've seen that shift very much so in the last decade. Now, around sort of in 2010, I think only about 10% of all these sovereign wealth funds and insurance companies have allocated capital to the private markets. This has started to increase. I think it's almost doubled now to 20%. As you have seen in the earlier charts we've shown, 20% of a capital allocation within these large institutions are now in private markets. Some of them are invested in real estate. Some of them are invested in alternative credit, private equity funds, and venture capital is obviously the biggest buzzword in the fund management industry today. Next slide, please. And following the institutions, having more allocation or a growing space in the private markets, the family offices have also started to allocate increasing amount to alternative investments. And a number of these family offices, again, because they have a longer term horizon, we talk about wealth planning, generational planning, they can take a longer term view. And so they're able to hold on to asset classes that perhaps could be in a 5-year or 10-year horizon. But more than 2/3 of them do see private equity as a sort of the cherry on the top. So most of them will have, as you see, 50 to 70% in traditional equities, bonds, cash, but starting to allocate a lot of that into real estate, direct real estate, private equity, hedge funds, and others. So we're the next step. If you think about how the thought process and the strategy and the allocation, and traditionally why it has not gone to retail or high net worth individuals, is partly because of the size, the illiquidity. There has not been the solution, the technological solution that's been able to help make that more efficient. And this is what iSTOX attempts to do. And this is how you can potentially invest in alternatives like the ultra rich. We create the platform and the opportunities and the access to invest and trade in private market products. The ability to fractionalize that into smaller amounts is because of the technology. The ability to trade, again, is based on our technology. But overlaying that is a very strong level of governance. It's a very strong level of commitment, because we are, first of all, MAS regulated. So we have 3 licenses from MAS to be able to operate our platform from end to end. We also have, like Endowus, a very strong management team, but also a board that has representatives and shareholders like SGX and Heliconia, as well as some large financial institutions across the region, Patra in Thailand, Tokai in Tokyo, in Japan, and Hanwha from Korea. So, we take this regulated business, and what we want to do is make all these products accessible in a very efficient manner. We can only take accredited investors at the moment, but clearly, it would be sort of our dream state to be able to offer all these interesting private market products to retail as well. But for now, we're accredited only. Just to give you a little bit of a snapshot of what it looks like. We can distribute products in US dollar, euro, and Sing dollar. You see everything in one wallet. You're able to sort of, if you want to sell a US dollar fund to buy a euro private real estate fund, you can do that on our platform. What we do is we work very closely with a traditional bank to make sure that all the accounts and cash that comes in are segregated and DBS accounts. And we again work with many sort of providers to make sure that the security of the money is very high. Next slide, please. So again, just to sort of summarize before I hit on some of the key products we've listed in the last year or so, we want you to be able to seize the advantages to sort of add a little bit of juice to the portfolio. Access the inaccessible, manage your risk. You can see all your portfolio on one page. And of course, we try to keep the fee as low as possible. So, so that because we are able to do that, we actually are able to sort of bring some of the very interesting fund managers onto our platform. Quant Edge is something Singaporeans should be proud of. It's one of the top 5 top 5 hedge funds in the world, actually. And we created the opportunity for investors to come in at a fractionalized basis. So that instead of having that 1 million that you need to get into Quant Edge, you can actually buy or trade iQuant. This is the feeder fund, the iQuant fund in 20,000 units or 50,000 lot sizes. So we're very happy with that. The fund is doing very well, and we hope to see more of that next year. And then we have another hedge fund, which we launched earlier this year. So. Interesting things, we're focused on a number of opportunities in the credit space, more opportunities in the fund space, and we see that very busy Q1 coming ahead. Next slide, please. We've done quite a lot of work in terms of making sure investors understand our platform. It's not, I'm sure Sam will appreciate this, but the new wave of technology creates some level of anxiety because no one really sort of knows what a new platform can do or might run into problems. I just want to sort of be very reassuring here. We have very, very strong shareholders who won't obviously let us get into trouble. But also that we're very good. We have a very good compliance and risk team, and they keep us out of trouble most of the time. We have had quite a lot of success. We recently signed a MOU with the Chinese And we think that that's an interesting opportunity for both capital as well as bringing companies potentially from China to list with us, or looking for companies within Singapore to sort of partner in China. I know sort of some of us are a little bit skeptical about China, but if you think about the growth companies and the technology companies in China that are just turning unicorns sort of on a daily basis, I think this is actually a very interesting space to watch. Next slide, please. So as a final pitch, we have spent a lot of thought and effort into creating a very seamless onboarding process. And if you're a Singaporean and you have my info, it's a couple of clicks and 15 minutes. So please go to www.iSTOX.com to sign up, and together with the Endowus voucher, we are also offering a $700 invest voucher when you sign up, or you can refer a friend and get $300 in cash. So that's all I had on my presentation. We will just now quickly move into Q&A. So anybody has questions, please feel free to drop it into the Q&A box, which I think you can see below, and give us a few minutes and we'll be ready to go. Okay.
Sounds good.
All right, Sam, let's start with first question. There are a number of other robo-investor sort of companies like Stashaway. What is the key difference? How do you stand out, Endowus?
So you're going to throw me in on the deep end, huh?
Oh, yes.
Question.
That's a fun one.
Yeah, I mean, there's a lot of wonderful solutions out there. There's a lot of robo advisors out there. We actually don't consider ourselves a robo advisor because many robo advisors use algorithms to try to beat the market, and many times it's like a single product that they build. So they normally have a fund management license. And so they're like a fund manager. To us, they're no different from, a BlackRock or a Schroders or, quant hedge fund manager. So, we're completely different in the sense that we want to build a technology platform that is an open platform. So we actually don't mind having, any type of product. We can do mutual funds, we can do, ETFs. We can actually do BlackRock and Pimco, but we can also do, a Stashaway fund if it becomes a fund and is best in class. Also, we want to, take care of the total wealth of our investors. So, their short-term cash needs, their core allocations, long-term investments across varying different products, and depending on your personal needs, your circumstances, and your goals. So, we're a total wealth platform. As I said, we're like an Amazon. And we're not like trying to beat the market. We're trying to find the most suitable product for them. And the most important thing that we focus on is not the performance of the product, but really we focus on giving good advice to our clients so that they can build wealth in the right way. And so that's the key differentiating factor. There's many other like small details, but in the end, what it boils down to is, once again, advice, access, and cost. And being able to come to a platform where you can manage your total wealth, including your CPF, since we're the only digital platform that has it, is really crucial, managing your money holistically. And so Endowus sets itself apart because we're the only platform that can manage all of your wealth in one go.
Well, you know what I really am very impressed with is actually the partners that you're working with. I mean, these are global, gold standard names, and you're so excited to be working with them, right? I think that really is a testament to your team and what you could bring to the table to a BlackRock or a Pimco, etc. And I think I stare at my CPF and I don't know what to do with it. So the fact that I think you have I think CPF is also very trusting of what Endowus can do for Singaporeans who have pensions in there. So I think it's fantastic.
Absolutely.
Yeah,
absolutely. It's been a real challenge, but working with the CPF board, with the Ministry of Manpower, with the MAS, to achieve good outcomes, just like iSTOX. I mean, you guys have had to work with MAS, really, push the frontier of technology, and really thinking out of the box to try to find solutions that make sense for our investors and our clients. And Endowus had to do that for CPF. We're doing that with our digital wealth platform. And so we're very excited to be working with, many partners, but iSTOX is one of them as well. So we hope that we can do more with you guys.
Absolutely. This is one for sort of for you. What do you think is the biggest difference between a ultra rich investor, the mindset versus the average Joe like me?
I mean, it's very difficult to generalize because even the ultra rich, there's such a varied selection. There are people who are very well educated in financial investments, who have really institutional frameworks of managing their money and also their family money. Sometimes they build family offices and do it in the right way. But I know ultra rich people with billions who also have family offices and they just run it like crazy. Risk parameters, they tell their kids and their investors to find the next Alibaba, and that's it. So there's like random mandates out there. So it's not like there's a one way to do it. But what I would like to probably highlight is that people who have built wealth and have a sizable asset to invest invariably have distinct advantages. So they get access to the best advice, they get access to the best products, and they get better pricing. And things like that is something that you don't have access to as an individual investor. And once again, these are the problems that we're trying to solve. But it's something that they clearly have a huge advantage on.
Yeah. Yes, exactly right. I mean, they a lot of them just hire their own. I mean, if they were to carve out a portfolio to be managed, they could hire their own teams. Sort of get quite a lot of advice from the private banks as well, right? So, will there be any need for banks eventually if fintechs, sort of rise with more and more complete solutions? Do you think banks will disappear, or do they have to change their model? What's your view?
Oh, they have to change their model, right? I mean, we both come from large banks and they've evolved over time. They're not the same as where they were before. We were both in Morgan Stanley and I was there for a very long time. And the Morgan Stanley now is not just an investment bank. In the US, it's a wealth platform, right? It's the biggest wealth service provider in the US and one of the largest globally. So they will evolve. I think the adoption of technology is a must, but they're obviously very behind. They have huge legacy infrastructure that they need to upgrade. And especially the space of wealth, they've actually chosen to go with kind of B2B robo solutions and outsourcing the solution rather than trying to fix it themselves and build themselves, which I think honestly is a short-term win, but it's a long-term loss for them. It will be very difficult to personalize and really provide an experience that customers will really want through those kind of off-the-rack kind of solutions that it all looks the same. You go to DBS, UOB, OCBC, they all have the robo services and they all look exactly the same with the same products, and they're all actually quite expensive still. So the whole point of moving to digital, which is a better experience, a differentiated experience and lower cost, they're not really achieving it at the moment. So yes, I think they will change, but it will be difficult. It will take a long time. I think there's opportunities for young, nimble, fintech companies like iSTOX and Endowus to carve out a niche and maybe even, carve out a huge pie, hopefully for both of us in that space. And banks will have to respond, but it will be difficult, I think, longer term. And they'll go back to, sorry, just to wrap up, they'll go back to their core, which is lending. They need to do lending better as well, right? That's something that we can never do.
Yeah, I think you and I both know, I think the legacy costs in a system is still very, very high. And, I think that there still needs to be a lot of consideration, even if they were to build their own digital product, as to how the rest of the bank still has that high level of whether it's a compliance cost or systems cost. So I think it will be quite interesting to see how banks respond to this. I think certainly you would be, something that they would have to think about in a broader sense. I also see some of the private banks, start moving their minimum requirements higher and higher, just
Yeah.
because even now, 2 million to the 20 million net worth teams, just not profitable anymore.
No.
So they are also increasingly pushing a lot of, 2 to 10 million clients into tech solutions, and sometimes not very well built.
Or they provide lending leverage and say, we'll lend you another 10 million and you buy a bunch of financial products and we'll get a lot of fees for that. So lending is, again, the tool that a lot of private banks use to leverage their clients and get more fees for themselves.
This is a question for you again, Sam. This participant is not an accredited investor yet. How does he become an accredited investor?
Oh, accredited investor is something that you're either are. No, you either are or not. I mean, the threshold is $300,000 of income. It's $2 million of assets, of which one can be accounted for by real estate. The other 1 million, you have to have financial assets, and that's an MAS regulation. So if you're an accredited investor, then you can access iSTOX solutions. Endowus does have more products for AI investors too, but mostly focused on the core products, because there's some fund managers, really wonderful fund managers, that do not have a retail fund management license here in Singapore. And some of them are, ESG funds, it's, thematic funds, it's, technology funds, and some really core products that are really high quality. And then, AI investors, obviously, through iSTOX or Endowus or other channels, can access, a lot of alternative type products as well, which is the key difference between AI investors and retail investors. But the difference for Endowus is that we really want to bring a broader suite of products for retail investors. So we'll figure out a way to, bring AI products to the retail and to the mass. Also, we need to solve for CPF. So we brought in, Vanguard passive index funds into CPF for the first time. It's unbelievable that a pension system where you're investing does not have a passive investment strategy. So it's unfortunate, but now it is available. And we had to partner with a local fund manager, Lion Global, to package it and put it into the CPF system. And so now it's exclusively available to Endowus customers, because we are the lowest cost. We lower the cost of access.
Right.
And those are some of the things that we can both do, iSTOX and Endowus, really thinking out of the box and solving for these problems with the depth of knowledge and experience that we have in the financial industry.
Well, this is a question for both iSTOX and Endowus. How does Endowus think? Well, how do both of us think about sustainable investments? I'll go first. I mean, we're a little bit more bespoke, but we're very focused on how we can use our platform to support sustainable investments or sustainable issuances. So one of the things that we're looking at for next year is how can we support, for example, green bonds, as simple as that, right? Because we have the platform for that. The big companies obviously can raise bonds as and when they like, but for smaller companies who don't meet the benchmark size, don't necessarily have the avenue to issue a green bond even if they wanted to. So that's one aspect that we're trying to look at, but we're very focused on sustainability. Yeah, absolutely. I think it's a must. I really think it's a must for every financial service provider and solution provider too. So Endowus is really, very committed to bringing more sustainable products to the market, both for CPF and for cash investing across core allocations in equities and bonds. So we're working with fund managers. There are some wonderful products out there. We're screening them. We're putting it on our, newly launched Fund Smart platform, so you can build customized and personalized portfolios onto it. So sustainable equities, you mentioned some green bonds, but carbon
footprints, maybe even thematic stuff like aging or, other sustainable ESG related or socially responsible investing and impact funds are all available out there. We just need to package it, bring it to the retail masses, and put it into CPF. So we're busily working towards that aim. And we will be launching actually our ESG suite of products very soon. So please look out for that. Yeah.
Very good. We'll help you do a launch around that.
Yeah, that'd be great.
This is a question from Dennis. Does accredited investor funds typically have higher risks, and why do these funds require an accreditation? Well, in Singapore, under the Securities and Futures regulations, there are different types of products that we can offer to retail investors, and different types of products that we can offer to accredited investors, which are high net worth investors and institutional investors. When we say accredited investors, as Sam said, it's a 300,000 per annum net income, or 2 million in net worth, or 1 million in financial assets. So it really is to cut off investors that would have a larger sort of financial support, and are likely to be perhaps more sophisticated in the way they think about investments and risk. Now, a lot of these funds that are not sold to retail, the reason why they're kept at the institutional level and the high net worth level is because sometimes they're higher risk. So like hedge funds could be fluctuating 20 to 30% up or down. And again, because the minimum ticket size is 1 million, obviously that's a lot of concentration risk if you were to invest in just one hedge fund. Or it could be a private equity fund that has a 10-year fund life. And so the investor would not be able to get out of that fund for 10 years. So it's extremely risky for an individual that may have liquidity needs and they cannot actually monetize the fund in some shape or form. iSTOX tries to solve some of those issues for high net worth individuals, which is to allow secondary trading, and we break them up into smaller sizes so that they can invest. But we still unfortunately operate under the accredited investor regime under the Singapore regulations. But feel free to check the accredited investor status out. You might actually be an accredited investor and not know it.
Yeah, we actually have quite a few investors who don't bother signing up as an accredited investor, because it's a bit of a hassle, right? But it really is beneficial to you because it gives you a more diversified choice of investment opportunities. Obviously, you need to do it for iSTOX to get on board. So it really makes sense for you to do so because it gives you more choice. And as you highlighted, I think it is typically higher risk, but it's not always the case. And one of the reasons is because I mentioned big global, fund management companies and large local managers like Lion Global, Fullerton, UOB Asset Management. These guys, they have a local retail license, but some fund managers have great products, but they may not be big enough to have a local retail license. And so, it's not necessarily that they are always higher risk. It's that, it's just a regulatory framework to protect the retail investors. And, it's up to us to try to solve those problems and the regulatory, within the regulatory frameworks so that we can offer better products and more diversified products that weren't available before in the market.
I think that's exactly right. If you see, well, even if you look at some of the private equity funds, I mean, not that they're available to retail, but they're not even available to high net worth individuals, is because they get so much capital from the sovereign wealth funds and the insurance companies. They don't require a large team to manage a small investor, a base of small investors, and so oftentimes they don't open that access. And so it is up to technology like ourselves to help facilitate some of that. Anyway, last question, which is a interesting one, and we'll sort of have one more question, and we'll sort of maybe post that, have a few closing words before we let everyone off for the evening. This is a question on cryptocurrencies. Sam, with the recent institutional interest in cryptocurrencies, you would have seen DBS is potentially launching their crypto trading soon. What are your views as an allocation in a portfolio, given its negative correlation? Well, or not, but.
Yeah, that's a tough one because, I try to look at history and long-term returns and correlations as part of that analysis. And having, uncorrelated assets is a wonderful thing. But I think it's not purely just about uncorrelated assets. It's knowing what to invest. A financial asset, historically was something that yielded you something. So fixed income yields you something, equities has an earnings yield, a dividend yield, So it's similar to other currencies, and gold would probably fall into that bucket. It's uncorrelated, but it's not traditionally seen as a financial asset because, it doesn't yield you anything. So cryptocurrency, I see the benefits of it. I see why people are really on board with kind of the missional aspect of it, that, decentralization, we cannot believe in governments, they're printing money, the value of fiat currencies are going down. I don't think US dollar hegemony or, like the dominance of, fiat currencies as a, tool of exchange, as mode of exchange as a currency is going to go away. Trade, there's financial transactions, and there's so much that's going on that, remains so core to the financial system. But at the margin, I can see the benefits of crypto or distributed ledger technology. I'm all for advancements in technology. If we can use digital tokens like iSTOX or cryptocurrency, then yeah, I mean it's a fantastic utility that we should utilize. But as a financial asset, store of value, that one is questionable because financial assets have to have underlying value. There must be a way to analyze the value of that, and that one's really difficult. It just purely becomes a voting machine or a demand supply kind of thing where if there's more demand, price goes up and that's it. So it's difficult to forecast, it's difficult to analyze, it's difficult to say whether there's any fundamental intrinsic value in cryptos, and those are the difficulties for to look at crypto as an asset allocation within a traditional framework. But if you want to have some exposure, please limit it to maybe about 5% or less of your total assets, so that if it goes bust, you don't lose your shirt and your future as well. Yeah.
Great. No, that's always a fascinating topic. I think that DBS set the media on fire a little bit with that, but they have not come out to confirm because I don't think MAS has given the nod yet.
Yeah, and also, I mean, it is becoming more institutional. It's on the exchanges. People are developing some passive funds around Bitcoin, for example. So there are efforts being made to institutionalize it and make it more efficient, giving access to a broader suite of investors. But yeah, early days, to be honest, still. Yeah.
Great. I think we've come to the end of our webinar tonight. Any sort of parting words for the audience, Sam?
No, it was wonderful to be here, to be with the iSTOX team. Thank you so much. It was a real honor. Thank you for inviting me and the Endowus team here. We really look forward to working closer together in solving, the investment, problems that we face here in Singapore for all investors across different, asset classes. But I think we have the same mission and vision ahead of us. So we want to work closely together. And so we're very excited about the future.